Last week, the S&P 500 was up 2%, though it is still down 17.5% on the year. I'm Jeremy Reed with Advent Partners, and thanks for tuning in for a quick market update. June's job report came in on Friday, and 372,000 jobs were added to the economy, which was higher than expected, but a decline in the labor participation rate kept the unemployment rate steady at 3.6%. A strong labor market continues to be the silver lining in an otherwise difficult year, but the fear among economists is that inflation, if not reined in, will finally turn this positive trend negative. In other economic news, the U.S. trade deficit shrank to the lowest point of the year as exports rose 1.2% in May. If you recall, surging imports were a significant contributor to the first quarter's negative GDP reading, so trade balance improvements should help the reading in the second quarter. Finally, inflation remains the major headline, and we expect volatility to continue until we receive some certainty that inflation is brought under control. I still believe the long-term investor who can stomach this difficult time until we get back to recovery is still the best investor. We have seen double-digit stock market returns for the last few years, and in turn, we've seen FOMO investors rush into markets and even cryptocurrencies. But now we see those same investors panicking and rushing back out of markets now that it's down. Stock markets will rebound, and we will get back to growth. I'll be honest, I don't know if it'll be this year or even next year, but it's the patient long-term investor who will be rewarded for staying put and waiting for that time of recovery to come. If you or someone you value has concerns about how the current economy affects your investment portfolio, please give us a call. We'd be happy to speak with you and help how we can. Thanks again for listening.